The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Matt Bennett with agmarket.net joins us for a conversation. And Matt, appreciate you being with us on the show again. And man, oh man, wondered if we'd have a surprise on the December report. And honestly, we didn't, outside of maybe the corn adjustments. I know they had a raise to exports. Your thoughts on that and just this WASDE in general, Matt?
Yeah, and so when you look at the corn balance sheet, clearly you take exports up 125 million bushels in the month of December, and it tells you that the USDA is paying attention, to the fact that we're running, 60-some% ahead of last year's, quite frankly, very impressive export pace. And so as of right now, we're running a little under 10% is what they were before this report. The projection of over last year, where we're actually 60-some%. So they came in here, adjusted it up to $3.2 billion. But a lot of people are sitting here looking at that feed and residual still at $6.1 billion, saying, good night. That thing's still, elevated, if you will. And I got to think that if there are production adjustments in September, they'll use that residual usage like they like to, which is kind of their wiggle room. And so I've got to think that if you see production come down, you're probably going to see an adjustment lower in demand as well. So move over to the world side, though, Jesse. You and I have talked about this, but, you look at that new crop world balance sheet, and I'll tell you what, you're going to draw down world stocks 14 million metric tons this year, and that's with a production increase of 53 million tons. So, we've just got incredible corn demand and usage that's going on, whether you're talking U.S. or world. And so that's a really good thing to see. Beans, nothing to talk about there, really. Is just, no adjustments were made.
Well, and with the beans, I wonder, too, if USDA kicked the can down the road because they're waiting to see what develops with all these potential China purchases. I mean, that's kind of the dark cloud that's hanging over the soybean complex is, do we have a final agreement? When is it going to be signed? Are we going to start shipping? Things of that nature. We've only seen a minimal amount of shipments so far. It just seems like we kicked the can down the road to January to see if we have more movement show up on Chinese soybean sales, Matt.
No, absolutely. I got to think that was part of it, no doubt about it. Of course, crush has been fantastic, but they've got crush up there pretty strong right now. So how much air could they let out of the balloon, so to speak, whenever you're looking at exports? And last month they did 50 million bushel. I think they could probably go another 50 to 100, depending on what happens here with China. So there's no doubt the trade has been frustrated with the lack of expediency, if you will, of Chinese purchases. I mean, a lot of people felt like when that announcement was first made, and then they said it'd be by the end of this calendar year. I mean, it took a while to get that out of anyone's mouth, but that was the indication that they led us to believe. We felt like, boy, we're going to get a ton of sales here over the next few weeks, and it just hasn't really come to pass. So then last week, Secretary Bessent was on TV and said, hey, they're coming right along just like we thought. This has got to be done by the end of February. Well, boy, that's the first anybody'd heard end of February. And I think the market's just been really frustrated by that. Don't know necessarily whether to believe that'll actually happen or not at this point. And I think that's part of the reason why some of the longs have gotten flushed out here, just because they don't feel confident that everything's going to happen as we've been told it would happen.
No, that's an excellent point. And, with all of this as well, we obviously saw that long-rumored farmer aid package announced on Monday afternoon to the tune of $12 billion, $11 billion for row crops, $1 billion for specialty crops. It didn't seem like, though, that had much impact in Tuesday's market trade. It seems like that the trade already had kind of factored in that something was going to be coming. That's the feeling I got. Did you get the same feeling, Matt?
Yeah, I mean, I don't think it had much impact here today. I mean, and when you look at the aid package, I know like Paul Neiford put some stuff out, on what he thought per acre this was going to amount to. And clearly it's going to be a decent amount of money for the grower. I think the concerning thing for me, Jesse, is that, with the vast majority of growers, I mean, you're looking at really, a 3-year equity drain. it's just been a pretty tough row to hoe here. And while this will help, I think in some instances, I think that it's going to be problematic still for a lot of growers. Whenever you look at what balance sheets, when you look at break evens and cash flows for 26, they look pretty challenged right now. And I think if this bean market continues to roll over, if you will, it concerns me, because not only from a bean profitability standpoint, but it might take some of the support out of corn if the bean market goes down and takes out the gap that we see lower in the chart, now the 15-20 cents lower. If that happens, I've got to think it's going to be tough on the corn market as well.
Well, and I know, too, when it comes to basis and things like that, I mean, there's some areas of the country that, the aid, a bit of a Band-Aid here, but the basis still stinks. I mean, I'm in Fargo, North Dakota here today, and, you look up the Northern Plains, there hasn't been a lot of movement out of the PNW, so basis in the northern tiers still pretty shoddy. I mean, there's some risk management questions that I think a lot of folks still have here as we near the end of the year. I guess that's where I'm going with this, Matt.
No, absolutely. There's a ton of risk management questions. And it's, I think one thing that concerns me, Jesse, is that, earlier in the year, it was a foregone conclusion that the administration was going to roll out this huge, I would call it bailout only because that was the terminology that they'd used. But I know some people get itchy or ouchy, when they hear the term bailout. But by all means, they said it was going to come out. And I've got to think that impacted some growers' decisions on marketing, this past fall. And so obviously we've had some give and take. We don't know what we're going to do. We don't know how much it's going to be. And I think it's been pretty frustrating, I think, for a lot of growers, because they could have used this information, prior to harvest, because I think it would have given them, a little more confidence to step forward and, maybe adjust their marketing plans based upon what would be a little bit of assistance on the side. So I don't think the timing is fantastic. But again, I highly doubt any growers are going to turn down the money either, just especially due to what's going on here.
No, I mean, that's the other point. Folks, they're going to need a little bit of that support, this bridge, to help us through, and we'll see what comes ahead here as we get into 2026. South American weather, that's pretty quiet right now still. Not much of a market factor, but it's going to become a bigger factor here as we get to the end of the year, Matt, and we start to think about our acreage battle for 2026. I think that's another big piece of this conversation as well.
Oh, for sure. And so, when you look at South America, the only area of concern really is southern Brazil and Argentina are still a little bit on the dry side. Most of your forecasts have them not getting quite as much rain as the bulk of Brazil. And so most of your estimates is this Brazilian crop is going to be massive. It's a little early to say the Argentine crop is going to be hurt. So most of your estimates there are still status quo, if you will. But when you shift the focus to acreage, there was a time when I thought we would really lower corn acres. But I'll tell you what, you talk to ag chem retailers, you talk to people in the seed world, and it sounds to me like corn acreage is still going to be pretty darn strong this next year. Whenever we had November 26 beans up there at 1130 and above, I was thinking, you know what, that's looking pretty attractive for a grower. It might end up getting us to a point where corn actually has to buy a few acres, to be able to keep the kind of acres we need. But as of right now, if you had to kind of put me on the spot, I'd probably be in that 94, 95 range for corn, and maybe 83 or 84 for soybeans. I think that you're going to see a decent little pick back up, because I think your corn to beans, beans to corn guys, that's going to indicate beans should definitely grow, especially with 98 million acres planted this last year of corn. But I do think some of those corn folks, I think they're probably going to stick right with it, which will be interesting, because it was definitely very expensive to put a corn crop in the ground for 26 again.
Matt, final thoughts here. Livestock, we should touch on that. A quieter day in cattle and hogs. What is your feeling as you look at the proteins here?
Well, the last 2 weeks, we've really had a nice resurgence, but at the same time, you look at both fats and feeders, and it looks like we're kind of stalling out here. It looks like we're having a hard time keeping the buying enthusiasm, if you will. I still feel like we've got a shot at going up and closing gaps. So, maybe depending on whether you're talking fats or feeders, another $5 to $10 higher. I don't see new highs for either. I just think that the industry, if you will, is still pretty shaken over what they would say is, something out of their control. Whenever there's a tweet or a Truth Social post saying that we've got to adjust things in the beef industry, I think what it's done is it's pulled some of that money out of the market, and I just don't know that they've got the confidence to step back in just yet.
Matt, I know if folks want to reach out, have a conversation with you and the team there at agmarket.net, it's just as easy as going on to the website, get signed up for the Nashville conference. You guys got a lot of great stuff lying ahead here as we get into the new year, don't you, Matt?
No, absolutely. We'd love to hear from anybody. Just check out the speaker lineup because it's going to be pretty fun. I think we've got one heck of a group coming. So, I would just visit agmarket.net. You can find out everything you need to find out.
And I know I will be there as well in Nashville, and Matt and their team, and again, a lot of great speakers going to be there also too. Talk about these markets and your risk management and your operation. Matt Bennett, agmarket.net. Always good to talk with you, my friend. Thanks for joining us on Market Talk. Have a great one, and we'll talk to you again soon.
Absolutely, buddy. Thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.